Hey guys, good morning. It's the Crypto Cowboy. It's the 25th of April here, and Saturday morning, coming to you with another edition of Bitcoin Technical Update. I should call it today more of a macro technical update. I'm going to take a look at several markets here, not just Bitcoin. I don't know. Probably most of the followers up here on YouTube are crypto guys, but I'm probably going to start doing a little bit more of a macro view, maybe each week, to see where we are with the overall market. I think all of them move as part of a global macro structure, and it seems that Bitcoin is starting to fit into an overall narrative here, especially lately as being more of a risk trades, more of a risk asset, not as much as a safe haven. So I think it's still looking for its place into this global macro place. But just kind of looking at the overall markets, I think we can start to get maybe even a better feeling for the cryptos in general. So with that being said, I'm going to start by looking at Bitcoin, and then we'll move on a little bit to the S&P 500. We'll move on to gold, move on to the oil markets as well. I'm not going to cover the dollar index in today's video, but I will probably introduce that in some futures videos as well, because I think that's also an important aspect. The dollar index has been in pretty muddy waters here for the past few months, and there is no clear indication from the forex market of the near-term direction here. So we gotta still be patient with it. But going back to Bitcoin here, what we're looking at, and I want to kind of recap from the last week's video, also just for the new subscribers to kind of know where we are in the overall scheme of things and what am I looking at in terms of the wave principle. So overall, we're following I think about 3 or 4 counts where we have a couple of them bullish, couple of them bearish, and overall, if you're looking at Bitcoin, right, ever since we've done these lows in these highs in December 2017, we're pretty much on a sideways move up here. I mean, I don't have to squeeze the chart much to see that we are in a big rectangle here, and it's there's no real direction for the past 3 years here. And under the pink count interpretation, this is a bullish count, and we're considering this drop here as part of a fourth wave. If I go to a 4-day chart, you could see that we're looking at this as being a large third-degree advance as a part of a fourth, and now we're starting to build this fifth wave up. Going back to a 2-day chart, this would be the initial rise in a wave 1. A wave 2 pullback into the 786. Very nice support. Very deep. And since then, we're trying to recover. The idea here is that we are starting to build, the initial advance as part of this larger fifth wave, and that should start as part of a 1-2, maybe another 1-2 that gets built up, and we're getting this wave 1 completion. Then we'll get a larger second wave pullback, and then that will become a 1-2, 1-2, and then we should get the meat of the rise, which would be this third wave. That can, it's got a lot of room to rise up here, but it would probably take us above $20,000. So this is on this pink count. The difference between, let's say, between the pink and the red, it's pretty much, it's the same count. What I'm looking at, it's some different alternation within the smaller time frames. So as on the pink count, I have more of a 1-2, 1-2 scenario, and I'm going to take you there. For example, on the 6-hour time frame, I was looking at this as being a leading diagonal in a wave 1, wave 2. We're building another 1-2 up here, starting to build another 1-2. So you can imagine that the rise that's supposed to happen here is supposed to be very aggressive, and that's how you read price action into what's coming. Anytime you see any electrician doing a 1-2, 1-2, 1-2, you know that they're very bullish on a certain element or whatever markets they're looking at, and these are extremely bullish counts, and the market has to respond accordingly. If it doesn't, something else is going on, and we have to be aware of it. So, the market has to basically, under this interpretation, has to unleash here and pretty much go straight up, right? So we would look at the next move to go, 10,000, 11,000, just do a very sharp rise up under this interpretation. The red count is a little bit more conservative. And if I go comparing to the pink under a 6-hour time frame, this would be a 1-2, and we're building just a very small 1-2. So we only have 2 1-2s instead of 3 as we have on the pink interpretation. 1-2, 1-2, and now we're in the middle of this kind of third wave here that's developing. Even this one has to be a little bit more aggressive. If I even go to a smaller time frame, this is, you know, kind of one of the main counts that we're following into our trading pro room, and we're looking at this for completion. So if I go to a 1 hour chart here, we're looking at this, if we go into the middle of it, as this being the second wave. This is a 1-2, and this and this is something interesting, right? We've had kind of trouble counting this decline down. In one of the bearish counts, we were looking at this as possibly being a second wave, and this an initial decline as we're going to go downwards. But the fact, and this is one of the clues that you can look, every time you have a truncated fifth wave, you're going to get a very sharp rise as a consequent move. Truncation means that there is an underlying bid and a very strong bid below the market that's going to push prices much higher. Now, the problem with the truncations is they're very hard to count in real time. And you should stay away from them because then you fall into the trap of always counting truncations, and then you can screw up your counts big time. So there is not much you can do about them just by going back and seeing them with the subsequent rise and say, well, that was a truncation and that's what happened. So into this count, we've had a second wave in at 5, 3, 5, 1, 2. So you have a 5 wave up, down in A, up in B, 1, 2, 3, 4, truncated fifth. And then the subsequent rise was really strong. So you go in a 1, 2, 3, 4, and 5 for a wave 1, wave 2, wave 3, wave 4 complete here. We were looking at this as being, hey, what if this fourth wave is getting kind of long in the tooth, and even now, I need the market to start breaking up higher here for me to consider this a wave 4 and this a wave 5 advance. Otherwise, we could be running into something else, and I'll show you that shortly here. So the market needs to respond. If it doesn't, we got issues, because then I'm going to have to take this fourth wave and place it much larger, and it's going to start to look very awkward compared with the second wave pullback on here. All right, so this is kind of what we're watching here near term. We're still being cautious, and we're just reading the price action following this break of this sort of a neckline here to this inverted head and shoulders. And if it's a breakout in a 1, 2, and 2, the markets need to go. I know it's weekend, and we might get some just maybe smaller volume, but it needs to get going to start confirming the bullish outlook. Now, let me take you to, and I know I kind of dove in, from the larger to small time frames, but maybe this is a little bit better to just kind of see where we are. Now, on my bearish outlooks here, remember we've had this big drop from 10,000 all the way down here to 4,000. So a $6,000 drop into the price of Bitcoin, and you just cannot ignore it. If it's a C wave, yeah, we have to rally. But what if this corrective move since December 2017 is not over, and this is just a W in an ABC? You have an X wave, and then this is an A, this is a B, and the markets continue to move lower. I mean, this could also be an X wave, right? And we can count this a little bit differently, but the idea remains that we still have to move lower, either as part of an A, B, C, or as a part of a 1, 2, 3, 4, 5 for a C wave. And that means that this was just a wave 1 or a wave A. This is a rise up in a wave B or 2. And then the decline would be a C or a 3. And the move up here is corrective. Now, if you look at it, it doesn't look impulsive, right? It's a bunch of kind of smaller waves going up and overlapping each other. And it's just not as clean as you would see something from these lows down here, where the slope, it's a little bit, more angled kind of to the right, and there's a clean subdivision in a 1, 2, 3, 4, and 5, so you can start counting. This is a little bit sharp, and I think it still looks corrective. Now, the market will prove us one way or another, but we just have to be cautious. So going back from a 2-day chart to a 6-hour chart, this is kind of how I would interpret this. And into our updates into the pro trading room, we were looking at the possibility of this wave 2 actually being complete here, with this being a 1, this being a 2, this being a leading diagonal in a wave 1, this being a 2, and then the market broke lower, but we did go up higher. So what is the next most valid interpretation for a bearish outlook is possibly a rise up here into the 786. because our leading indicator here, it is onto the bearish outlook that this was an impulsive move. This is a corrective move. And if you can see by the nature of this rise, right, it's pretty choppy and overlapping. So the markets are struggling to rally. They do retreat, but they are struggling to rally. And we've had since March 12th, we are more than a month into it, and we haven't done a whole lot. Mind you, yeah, we corrected back from $4,000 to almost $8,000, so it's about a $4,000 kind of correction in here, but it doesn't look very, very impulsive. So my bearish interpretation here is that this is possibly a W in an ABC. We're dropping down. We have a correction down here in a wave X, and then this is another ABC. Now we're missing still. If it's an ABC, we're missing 1, 2, 3, 4, 5. You need 5 waves as part of the C wave. So that's why even near term, I'm allowing for this move to continue higher here and just kind of start to move up here. Give me a third, a fourth, and a fifth, maybe into about 8,000, 8,500. It is quite of a stretch for a second wave, but this is how I would see a bearish interpretation and a strong sell point down into these up into these levels with confirmation. Obviously, the price, you want to see a move of at least an equal length in the opposite direction, maybe in 5 waves, and then consider a top forming in there. Now, the other interpretation is down into the yellow count. This is more of a sideways move since December 2017. You guys know about this. The idea of this being a triangle, where this is an A, B, C. We're in some kind of a super corrective move as part of this D wave. We still got to do an E, and then we break up higher in Bitcoin. So, this is encouraging for the bulls, but again, it could mean, a lot more pain ahead here for the price of Bitcoin. So, what are we doing here? If this is, let me go from a 2-day chart to a 6-hour again, and we're considering this is the initial advance into the triangle, and it could be more of a complex correction. So you can do, let's say you can do a double zigzag in here, or you can have this, it's a 3-wave rise, so you can be a WXY, and then this is a flat that's going to be part of the 3-wave rise up into this wave D, and this would unfold like this. This is wave A, so you have a 3-wave move down in A, you have a 3-wave moves up in B, right? Because for right now, you can only count from this low going up into this high. This is all you can count. You have a 1, 2, 3. We haven't made a new highs in here. We haven't made a new high, so it's hard for me to count it just yet. So it will be an ABC. This is a B. It's part of a flat. You can see up here we have, these two legs are kind of equal. You have a C versus A equality. I don't have a B versus A, but let me just do that really quick. So it's as part of a flat, we have gone to at about 127, 138, which is, super nice for a flat into a wave B. And that means that subsequent drop here, it has to be a 5-wave move down in a wave C. And maybe with just the initial phases as part of a 1, 2, we need a sharp drop in 3, 4, and a 5. And this could be, again, it could be a running flat, or it could be an expanded flat. And this would possibly complete this, try to complete this kind of B wave, and then we can go back up higher. So this is near term here, possibly a bearish outlook if this ends up being a flat move in here. And again, even if I get a small new rise up here as part of this C wave, so I still need to complete it. Maybe the markets will just fake out here, go a little bit up, give me a 5th wave, and then we drop sharply lower into this flat, into the C wave of a flat. Right, so I think I've covered pretty much, all the areas into the price of Bitcoin and how we can go in here. So, if you want to know more, a little bit about, again, the internals of the price and how we, look at this and how we trade them, and I do videos like this every day about the internal moves in smaller time frames, come into the room and, I'll be happy to run you through everything we've had and all the other charts and the discussions on there. And, you will learn how to, look and identify turning points and markets and Fibonacci and all that stuff. So we welcome you into our room. Now let's go a little bit and take a look at our macro view further out, and let's start with the S&P 500. And on this one, let me take you to a weekly chart just into the S&P. Actually, let me go to a 2-week. Basically, there is a couple of counts here, and we want to know what's the best interpretation here that we can take. I mean, we've had the market's corrected a lot since we found these lows up here at about 2200. I think they were 2175, right? And we pulled more than 50%, I think, into the 618 even. And where are we going from here now? Overall, if this was a fourth wave down in here, I think this is a cycle wave, and we're still a super cycle. Even if we're moving up here as part of this fifth wave in the super cycle, we do have to complete this move. And one of the counts says that this is a wave 1, this is a wave 2 as part of a flat, and this is a running flat, and then you're doing a wave 3, and now you're having an expanded flat as part of a wave 4. Little awkward to have two flats in a wave 2 and in a wave 4. They usually tend to alternate. One of them will be a zigzag or a triangle, but you would have you have two different type of flats into the corrective waves. And if this is a wave A, this is up in C, right? So you have a 3, and then this drop here in the C wave was very, very sharp, similar to what we're going to be looking in Bitcoin if that's what's going to happen there. And that means that we still need to make this fifth wave to the top side here, maybe towards $4,000 into the S&P 500. Now let's dive down here to a 2-day chart. So if we can count this complete as a part of a wave C, that means that the subsequent rise has to become bullish. And again, if we can count this as a wave 1, we can count it as a wave C as well, and that's what gives this look to the count. So going from a 2-day chart to a 6-hour, where we can see a little bit better, you have a 1, 2, 3, 4, and 5 for a completed C wave, and now we're starting to build a case for more upside. And the way we do that is this is a wave 1, this is a wave 2, and either this is another 1, 2 as through the alternate red, or we're still in the beginning phases of a wave 1 up, and this is a 1, 2, this is a 3, we're doing some kind of a triangle in 4th, we're doing a 5. That would become a wave 1 of 5, right, of this cycle wave in 5. And then you can go down in 2 again, maybe to the previous 4th wave low, and then go back up higher. So this is one alternate that we're looking. If it's a 1, 2, 1, 2, the markets, again, have to break aggressively higher. If it's a 4th, we're going to go sideways still for a little bit to kind of match the second wave from here, and then, look for a 5th wave. Now, I would have liked this 3rd wave to be more aggressive. They tend towards equality, so on the bearish count, I'm looking at this as actually being an A, B, and C for a 2nd wave, and the markets are about to break lower. We are short with our members here for a drop down lower into the 3rd wave, and we'll see how the markets move, but we have positions ourselves. Mind you, we only have a half a position. We're looking to build a little bit more in here with more confirmation, but those are details you can find out if you can come into the room. Now going into the bearish alternate, this is the move of a super cycle completion in here, right? And the move up here, it's a little bit of an awkward 4th wave, but it is a WX, and then you have a Y wave triangle in a 1, 2, 3, 4, 5 up here. If I go to a 2-day chart, you can see the move kind of terminating in here through this nice clean impulsive 1, 2, 3, 4, 5. So this is how we're counting the move is done into the stock market, and we are breaking lower in a wave 1, and then this is a wave 2. And the rise up is in 3 waves. We have an A, we have a B, we have a completed up in C here, or a possible, another some kind of a 4th wave in here. Looks like my battery is running low, so I'm going to pause the video here and let me just actually plug it in here. I'll be just quiet for a couple of seconds. Hold on. All right, I think I got it. And right, so yeah, even if this is a 4th wave of this C lag, that means that we're going to make a small new high in here, maybe reach equality at about 29.42 between this C and A, and then we're going to sharply drop lower. lower. But the idea here is that yes, we are near completion of this corrective wave second, and we're building a case for the downside in a 1, possible 2, and we're going to aggressively start to break lower. So it's very important in the next week, if this is a wave 1 and this is a wave 2 that's finished or near completion here, that we're not going to spend a lot of time here, doing any impulsive move into the stock market, into the S&P 500, and we need to start rolling over. So that would be one indication that I would look for. All right, so this is into the S&P 500. Now let me take you to gold, and then I'll finish up with oil. I know oil is interesting, and we'll take a look at that as well. So into the gold market, I'm going to start. Let me go and start a little bit with the bearish count. This is my preferred count at this point. And I was watching this ever since we were, down into this $1,200 level, when we were making either this as a triangle in B or some kind of a second wave. But, we were looking at the breakup higher into the price of gold, reaching these levels. We are a little bit extended here into the 786. We were looking at 618 to provide a little bit more resistance, but the markets continued higher. So there could be an indication of some, of a bullish outlook, but we don't have a lot of confirmation just yet. So let's just kind of take it one step at a time and look at this like that. So, the rise up here from, from 2009, right, beginning of 2000, super nice, clean 1, 2, 3, 4, 5. And is this correction here enough for this move? We're thinking not. And the Elliott wave principle says, I don't think you have enough of a correction to correct this whole rise. So that's why we need to correct a little bit more. And if this was a move in 5 waves, in a 1, 2, 3, 4, and 5 for an A, then this is an ABC up for a B, and we're supposed to break lower in the C leg. And, the rise up here can be counted in several ways. You could have a WX in a triangle, and then you have an ABC for a Y, or it can be an A, flat in B, and then you go up in C. Totally valid interpretation. Both of them are. The idea here is that we need to start to move lower. And I have a count here that's a little bit, and we are short on the markets right now with the members on the gold. We have a tight stop just above the highs here. We're going to try again if the markets do not respond, but we're looking at this as being a wave 1 down. This is a pretty, interesting pullback as part of a wave 2 in an A, B, 1, 2, 3, 4, 5, and now we're starting to move lower. Now, what I don't like, I have a 3-way structure in here, so we could make a new high. We might get stopped out, but we'll see. The idea is that, again, this was a rise as part of a wave B, and the way we're looking at that, if this is a triangle in X, let me just go, this is a little bit of a slightly different count, but again, W, A, B, C, D, E for X, and then this is an A, and then this is a B, and this rise up here was a C. You can look at this kind of awkward B wave as being an A. You're looking at the flat, you're looking at A, you're looking at the B in an ABC, drop sharp in C for a B, and then that's a C. You have, almost equality here between leg C and leg A, and then the market is supposed to roll over. So it's a pretty bold call, but the markets need to stay below the 1750 level and start to move aggressively lower. There will be plenty of time to short the gold market, but you need a wave 1 down, and you could then sell a wave 2 if this is going to get you more confirmation that the move is complete, right? You will need, and this will take time. It will take, you can spend the whole summer kind of building a wave 1 down, but if it starts to look impulsive to the downside, then that stronger confirmation will come that gold will go sub 1,000. So again, it's a try up here at the highs. I know there is not a whole lot of confirmation, but I like the risk reward in here, and I like what's going on, so I'm willing to give it a try and see how the move develops. Again, if I go, so this is kind of the other count, it's the red, but it's pretty much similar, right? And then the bullish alternate is like this, right? So if this rise up here was a third wave, and let me go to maybe to a 1-1 chart, right? If this is see how the 3 looks, right? 1, 2, wow, I have prices since 1967. So a 1, a 2, a 3, very small fourth wave in here, right? So you can see why we're looking at this as, even if it's, still a fourth wave, it still need a little bit more room to correct. So maybe, right, you have a W and you have an X, and then you get a Y as part of a fourth wave, and this whole thing moves down here and starts to get, more proportionality. But short of this being a 1-2 again, and a 1-2 position, right? Which doesn't matter. I mean, longer term, you can look at this as being still bullish into the price of gold. It's just a matter of if it happens right now or we're still going to correct lower. I mean, imagine this is a 3-month chart in the price of gold. So, this can still develop in here. So anyway, let's just kind of go back to a 1 month and look at this as being a fourth wave. If this is still, part of the structure of this is another 1-2, then, the breakup higher should be a third wave. Let's just go with that, right? So go in a 1 month, go to a 2-week in here. So either a 2 or a 4, this being a W. And, it's really kind of a little bit crazy to count it like that, but it's possible, and that's why I prefer the other one, because this move up here is much cleaner as impulsive than corrective. But this is an A, B, and then C for a W. You have a triangle in X, and then you have another A, B, and some kind of an ending diagonal here as part of this wave C, 1, 2, 3, 4, and 5, sharp up in 1. Okay, so you can count this correctively like that, and then you go in a 1, flat in 2, and again, now you're starting to build a case for the upside. And this is a 1, 2, 3, 4, and 5 for a wave 1. And this is where it gets interesting. So going to a 4-day chart on here, you're looking at this rise up here impulsively in a 1, 2, 3, 4, and 5, and then you have the sharp drop. So this kind of screws up the count because, for a wave 2, it's very sharp and very shallow, and that means that wave 3, needs to be aggressively to the top side. And I don't know if there's enough juice into this market to really get all the way up there, like that. So even then, if I go to a smaller time frame, you can see that you can start to count an impulsive move up, maybe in a 1, 2, 3, 4, and 5. So you would still need a corrective move lower, right? I know it looks interesting that we're near the highs here, but even for a short-term trade perspective, I think that gold is about to turn lower in here. And, if it's going to be the beginning of a downtrend or just a corrective move, we're still going to move lower here in near term. So 1, 2, and now what is this? Is this another 1, 2? Is this wave 2 a possible flat where you have a 3, 3, and 5 and come back here and maybe do a running flat as part of a wave 2? Possible, but everything kind of points to the gold selling off here. And we'll see. We'll see what happens. But the idea, if it's a bullish, then this is a 1, 2. Then we're doing here another 1. Sell off in a wave 2, and then we're going to aggressively move up higher. So I guess what I'm saying is it matters how we're selling off here. If we're selling correctively, then we're going to consider either this wave 2 is still in progress. I mean, I guess if it's going to be a flat, it's going to be a pretty sharp move down as part of a wave C. But if it's another 1, 2, then it's going to be corrective, and we're going to get some bullish moves starting from maybe 1500, 1600 zone, where we foresee a 3-wave correction here. We can embark in a bullish trade up into the price of gold. So this is what I'm seeing. I mean, it's not complicated. It's just what the markets show us up here, and we just have to get on the right track. And again, depends on how you trade. If you want to trade a short-term trading gold, you can do that. If you want to, stay short on gold till sub 1,000, might take you a couple of years, but you might get a good payout out of it. So it's all a matter of what you're looking at. Again, let's go back and look at the oil markets. Wow. So oil, surprised everybody last week, and we've had a drop into the futures contracts, and it came down to almost like, I think, minus $40 a barrel. So we all know the story. We know, that this is uncharted territory into the price of oil. And again, just when you cannot believe that something is happening or it's possible to happen, it happens. And I guess a lot of traders were looking at the USO and saying, hey, it cannot go below 0, and, let's pile up into it. Apparently, the longs onto Robinhood were massive. And either the oil traders or the market in general tends to punish, right, people that try to buy lows and pick lows, and this is exactly what happened. USO price just dropped below 0, and a lot of people got stuck with margin calls and money they have to pay, and huge losses. So this is what happens. Anytime you have a downtrend, try not to get in front of it. And as juicy as that sounds, sometimes this is a perfect example. And mind you, it could be just a maybe a single event into the price of oil, but next time happens into different markets. Same into the stock market. You think that a stock is at the lows, and next time it goes bankrupt or gets bought, and you're out of the position, and whatever. But it's always a risk without lack of confirmation to trade and pick lows or tops and stuff like that. So just be careful on that. Anyway, we have dropped and we have reached negative. So we were looking at this for a long time. I think ever since we were up into these levels, that the oil market is in trouble. So this took quite a bit of time to develop here. So 2014, but we were monitoring and watching this wave count for a long time. And I've introduced this into my room. Since I opened the room, I think we were up into these levels and we were watching this move develop. And if I go, I think I got a chart here that's back from gosh, I think it's in January or something when I posted this out there, and we were looking at the 1 week chart, and I don't even know if my private room was open back then. Must have been into the free room, I'm not sure, but anyway, this was one of the counts that we were watching. This was a W in a clean ABC kind of coming down, and this was a nice clean rise up as an ABC, and then we were looking for this market to develop lower, and reach $15-20 into the price of oil. Now, nobody expected that this will happen so fast, but the count was there and telling us that there's nothing bullish about this as yet, because this is a corrective move, and this is an impulsive. You have a corrective move, and what's coming, it's pretty nasty for the oil. And again, trading this, it's a little bit different than forecasting it, but it comes to show you the power of the wave principle, and it just kind of prepares you and tells you, hey, stay away from certain trades, or trade with the count, and try to only take bearish trades when the markets are pointing you into that direction. So the market surprised everybody and dropped below zero, but the counts were there. So kind of going back here to our charts, and let me just go back here. I'm going to take you a little bit to the rates as well. But so what's next for oil? And because this chart is a little bit screwed up into this motive wave, because I think it follow either the USO or just those contracts, and I don't have a clean. I mean, if I go, here's what happens, right? If I do this, if I take my auto zoom or auto correct here from the chart, this is what happens. And all the counts are getting messed up into this into this chart. So I gotta kind of go back and look at the trading view, and until I introduce something into the motive wave when it helps me count, I'm just going to stay with the trading view for a little bit. But going back there, I'm going to take a look at oil, and I think I have it on here. All right, so going to, from a 2-day chart, I'm going to go to let's say to a 2-week. Again, let me just go a little bit bigger here, go to a 1 month. So remember from our counts that this was, and actually I think I can pull it from here. So let's go and do, let's see, was this an ABC for WX? So let's do this. This is wave W. Sorry, this is, okay, let's just do that. Here, this is W. All right, I screwed that up. Hold on, let me just start again, guys. Delete, and we're going to go with the WXY. So this is W, this is X, and then this is wave Y in here. Okay, so this is an ABC for W, and now you've done a 3-wave up in X. And is this the end of the wave Y? Looks very disproportionate with the wave W. So you could count it as an ABC, and we're done. And the markets in oil find a bottom, and we're starting to move it back up higher. Or the market is still in a pickle here, and it's going to take a long time until oil becomes bullish again. Because, and this is the next contract in front, so I think it's possibly the June contracts that they're looking at in here, or July, and then it's giving you a cleaner look at the price overall. But the idea is you're still in a corrective channel, and if this is an ABC for a W, this is an X, this is a 1, this is a 2, this is still a 3rd wave, and you got to do a 4 and a 5 for A of Y, right? Because this is how you kind of take that, and I'm going to show you, right? So you go, this is an ABC, so we're going to start from here, right? This is going to be an A, this is going to be a B, and then this is going to be a C. So you need 5 waves down in wave A. This is a 1, this is a 2, this is a 3, you need a 4 and a 5 for the price of oil. Then we will get a sharp rise here in price of oil that says, hey, it could be something bullish, or it could be just a B wave, and we drop again and we go, another 10 years of a glut in oil, depending what happens to the global markets. And it's all going to matter. It's all going to depend how this rise in B wave is going to look like. If it's going to be corrective, something similar to this move up here, that means that it is a B wave and we're going to sharply drown in C. If the rise from here starts to be bullish, that means that, we have completed maybe a move down in oil, and, we're looking at some kind of, return to a bullish, bullish market into the price of oil. Nobody knows, and that's why, picking lows here is very dangerous. So we would have to start looking. And even if we go, so let's go from a month chart maybe to a weekly chart and see how this looks. So you can see there is nothing here that tells you anything is bullish. All right, so first you have to start seeing something like this, and I'm going to grab a line and just kind of just draw that out. Let me see if I can just grab a trend line in here. So you would have to see something like this, right? You have to go in a wave 1 in here, right? Then you would have to come up in a 2. Then you would have to start seeing a 3, a 4, and a 5, right? And until something like this happens, you can't really get bullish on oil, and this will take time, right? It could be a year before this happens. Now, yeah, you can start to look and maybe trading this wave 1, but you have to be really good and look into the futures market. If you're good at the futures, look at the smaller time frames and see how you can take advantage. But to start buying oil here and thinking that, it can't go any lower, and you're going to see $60 or $100 price in oil, I don't know if that's going to happen soon, right? And we're still into this channel, so the money could be stuck here for a long time doing nothing. That's just my take on it. For right now, the oil markets are completely destroyed, and they could be destroyed for a long time. So let's see how the moves develop from here. Yeah, I'm going to finish up with looking a little bit at the bonds and at the 10-year rates. So as you know, they move opposite of each other, and right now, if you wanted to lend money to the government, basically you're going to get paid on a 10-year bond. You're going to get paid about 60 cents. So this is kind of the yield that you're getting, not 60 cents, but 60 basis points for your 10-year bond. So almost nothing. And if you're going to get, if the markets are going to start, you might even have to, be negative, and you might even have to, expect a negative rate of return if actually the yield turns negative. Now, it's interesting. We'll see if that happens. But, the question is, what is going to happen if the rates actually start to rise? So if I go from a weekly chart here and I go to a 3-month, let's see where we are, right? So we're in pretty uncharted waters in here, and I don't think, rates have been dropping since, and I'm not sure, I'm here back into the 80s. So remember, look at this. If you lend money to the government for 10 years, you used to be paid about, 15%. Right, which was enormous. It was nice. It was, back then, if you have your money in the bank, you would get a very nice rate of return, and you would encourage savings, and you would encourage, people to, again, save their money and be careful. Ever since, 2018 here, it looks like, we've gotten into an economy of, just borrowing and borrowing. And, if you keep your money into the bank, you don't pay anything, or if you even lend money to the government, right? So what is this? Is this an end? And we are going to see, a big rise into the yields here, possibly. And, I'm kind of willing to take that bet. I don't know for how long. These rates are going to stay low, but I think, the markets are going to start to punish the governments here for their reckless monetary policy and for, pushing the yields so low through their, monetary stimulus and, to money printing. and we could be in a place where the rates are rising. And if the rates are going to be rising, that's going to be an even more pain ahead, because then all the debts are going to get more and more expensive. So, that can create a whole other problem and whole other issue. And if I go from, 60 basis points in here, and I'm going to switch here to the bond market, I think the charts are a little bit cleaner on here. You will see how we are possible in a fifth wave completion moving here. So you can have a 1, 2, 3, 4, and 5, and you could be done into the bonds at least for a while. So let's see how this kind of develops going forward. If I go to a 2-week chart on here, you could see right, this was a nice corrective move, and this sharp rise in here, it looks like it's a terminal move. So you can have a 1, 2, 3, 4, and 5. And if I go and I kind of take this and go even to a 2-day chart, you're going to see it even a little bit better. So you have a 1, 2, 3, 4, and 5 for a wave 1, down in 2 here. Another clean rise in a third wave. We're going to 1, 2, 3, 4, and 5. This is third. Nice clean corrective move up in fourth. And then you have a 1, 2, 3, 4, and 5. All right. And this can tell you by the 10-year rates reaching about 140 in here that you could be at the very major top into the bond market and into the yields. Okay, so very interesting where we are. If we're not breaking lower in here, or if we're not dragging sideways for a long time, and with the rates being low, I think that the odds are that the rates are going to rise. And if that happens, then the price of gold is going to go down, and the stock market can be hurt even more. So pay attention to this, just kind of in your macro views, and just take a look at the bonds, take a look at the yields, and see where we are. I mean, if you wanted to go on a 3-month and a 6-month, government notes on there, you will see that they're very low. They're at about 20 basis points, 15 basis points. I think they even went negative. But this is the price that the Federal Reserve is watching when they're about to move on to their rates. Now, those are the ones that are going to dictate what the Fed is going to do. So look at this and just kind of keep this always in the back of your mind, that if the rate starts to rise, there's going to be problems. So look at this and just kind of, the Elliott wave is telling us that we have reached a pretty major top in here. And even if we're, going to do just a slight new high in here, maybe this fourth wave is still in progress, right? 3, 4, and then, maybe this is still part of a third. You do another 4 and another 5. I think we're cooked here. We're going to be, maybe towards the end of the year or something like this, but then the rates are going to rise. So be very, very careful on this, and just kind of keep an eye on these charts. Even go to a 12-hour chart. I'm looking at this as being an ABC down for a W. This could be an X, and then this could be a Y. Then we'll do another high in here and then drop lower, or this could be the beginning of something else. If this is a wave 1 down, although it doesn't look like that just yet, maybe this is a triangle. So that's what I'm saying. We could still make just another high here, maybe another drop in yields, and then we're going to sell off. But I would start to keep my eyes on to the bonds and yields here, because I think we're reaching very strong and important levels at Elliott wave principle tells us that things are about to change in here. I think we are long in the tooth here into the bonds, and just kind of keep an eye on it. So I'll just leave it at this, guys. And I know this is a long video. It's about a 45-minute long video. I'm going to try to see if I can keep doing this kind of weekly macro updates. If you guys like them, leave your comments below. If it's too long, I understand. Next time I can run quickly kind of through them. Or maybe I'll do one a month that's a little bit longer, and the other ones are going to be shorter. But come into our room, into our pro trading room. It's on Telegram. You can see the links below. That's where we take shorter term trades, and we look a lot at the crypto market, and especially Bitcoin. But we do look at oil, gold, and the S&P 500 as well. So our members are very familiar with discounts and with the way we're taking advantage of them. You can learn Elliott wave and take advantage of that. we're glad to have you. So check those links below and give us a try. If not, good luck trading, and have a nice week ahead. Let's see what Bitcoin is going to do. Don't forget to hit the thumbs up button. I think that's important. It's just going to rise up the content, and more people can see it and get familiar with the wave principle. And until then, good luck, be safe, and I'll see you next time. Bye bye.